So for me growing up, I watched him struggle, my entire life until he passed away in nine. And I would say that's when I had awareness about my trust fund and inheritance was after he died. I really had no concept of money at all before he died. I was 24, 25 when I really decided to go all in and write the book and start coaching. So doing something for others and using your resources and wealth for something greater than yourself.
Welcome to the Bricks and Banks podcast, where real estate meets real wealth. Whether you're building from the ground up or stacking your paper to the ceiling, Steph breaks down property power plays and money moves you can act on. From first-time buyers to seasoned investors, this podcast is your blueprint for financial freedom through real estate, business, and investment. Subscribe now. It's time to build your future. This is Bricks and Banks with Steph.
Hey everyone, welcome to another amazing episode of the Bricks and Banks podcast. I'm your host, Stephanie, and today we have a certified trust fund coach. Yes, you guys are going to push back at him, but he said what he said and he's doing what he's doing, and he's here, he's making a life out of it. So Chase Collins is the author and certified master life coach, and he's the founder of the Trust Fund Coach. So besides the typical trust fund and inheritance battle, Chase Collins has battled emotional weight of inherited wealth, and he has gone through that path and he's charting an uncharted path to help others rewrite their money stories. Chase is on a mission to break generational curses, not just preserve them. And it's amazing to have Chase to the pod. Welcome, Chase, to the podcast.
Thank you. Happy to be here.
How are you doing today?
I'm doing great. Very happy to be here.
I like to ask my guests, where are you joining us from?
I'm in California, Laguna Beach.
Oh, the Big Apple.
Yes.
Nice. How's the weather there?
It's been nice. It's been, it's summer.
Okay, you guys are having a good summer. Here in the UK, it's just a bipolar summer because 1 minute it's cloudy and grim, the next minute it's sunny and fun. So I don't know. We can't really call it summer, but we're happy we don't have to wear jackets.
For sure.
So you're the certified master life trust fund coach. What's that about? How did we get here?
Yes. I started in the coaching industry about 5 years ago. It started at a Tony Robbins event. And yes.
Nice.
And I started with a different niche, and then through a lot of kind of healing and alternative therapy programs that I did, had this realization about this circumstance I had, inheriting wealth, and was inspired to essentially write a book and share my experiences. The book is dedicated to my dad and his family, where the wealth comes from.
Okay.
And yeah.
Can you share about that family dynamics? What was it like for you growing up? Did you know that you had the stash of cash? Did you know that you have an inheritance, like a huge sum waiting for you? What was it like growing up for you, childhood, in comparison to your peers?
I grew up in a small town in Colorado, and my dad was one of six siblings that had actually left Chicago and Florida and left on his own. And he was essentially told that he would never have to work a day in his life. And I really saw the negative impact of that. And so for me growing up, I watched him struggle, my entire life until he passed away in nine. And I would say that's when I had awareness about my trust fund and inheritance was after he died. I really had no concept of money at all before he died, but once he died, kind of put a whole new stress of money on my mom, and which trickled down to me being the oldest son. And so yeah, it was a really interesting dynamic growing up because my mom, she was also living this life funded by family wealth in their marriage.
Okay.
And once he died, she was on her own and had to work, and I saw her work paycheck to paycheck, and
Wow.
but also at the same time having a very brief understanding of having a trust fund and what that means, and So there were times when I was like 12, 13, 14, like emailing my trustee for money. So it was, I have a part in my book in chapter 1 that's called Both Sides of the Coin, because I really have kind of gotten to experience both sides of the coin, living paycheck to paycheck, stressed about money and struggling, and then also having money and having freedom and abundance and all of that. So it really was a weird dynamic growing up, but ultimately it all inspired this book and the work I do today.
Okay, so at what point did you say that, okay, I need to write a book on this? Because prior to your dad passing, you were sheltered basically. You had all the money coming in, but when your dad passed, everything was now handled by a trustee. So how did that shock hit you? And at what point did you say, okay, I'm going to write a book about all the struggles and everything I've gone through to share my perspective to the world?
So I was only 11 when my dad passed away. So I wasn't receiving anything from my trust at that time unless I needed something for education or whatever. But then I turned 18 and I went to college, and that's when I started to be able to use more of my trust, on a monthly or regular basis. And then it was about 3 years ago. So I lived for like 4 or 5 years, really off my trust, and kind of just like I had dropped out of college and I was living in New York City, and just got to a point that I was bored and I didn't have a clear direction. I didn't know what I wanted to do, and I was spending way too much money. New York City is very expensive, the shopping, the lunches, and naturally I had just met a more affluent group of friends who were in the same position. I was 24, 25 when I really decided to go all in and write the book and start coaching. So
Wow. And that was when you met Tom Robinson or before that? Because I know you said he inspired your coaching business.
yeah, I actually went to my first Tony event when I was 18. So it was kind of far before that, but that was my first introduction to like personal development and coaching. And then I had kind of gone off and did my other things, and um, came back to it like a few years later.
Okay. And I don't, it must be really hard for you, especially when you shared your story, your backstory to me while we're just chatting at the back end. But most people would look at you and said, why are you complaining? It's having a trust fund is the ultimate blessing. That's what most people are climbing and aiming to pass on to their kids. But you've seen firsthand why 70% of wealthy families lose their wealth by the second generation. So, what are the hidden emotional and psychological challenges that come with inheritance that people don't understand?
Yeah, I would say that it kind of depends on which generation we're talking about.
Okay.
I see it totally range depending on generations. If there's like a first or second generation, it's a little bit different for them. I'm seeing more like family expectations and pressure on that generation, because they have watched the generation build up an empire, build wealth, hustle, whatever it was they did to build wealth. So oftentimes what follows that is pressure, family expectation, and everything that comes with that. I'm a fifth generation inheritor. My dad was fourth. So neither of us watched anyone work or build the money. So like my grandmother and great grandmother both did not work. That's who the inheritors were. So when we're talking about that circumstance, it really comes down to a lot of people feeling guilty, feeling shameful, feeling not deserving, and with so much time and freedom on their hands, I see a lot of overindulgence and addiction. Yeah. So, it really is a multi-layered onion, and um yeah.
Yeah, okay. I like the way you put it because if you don't see the struggle, you can't appreciate the process, you can't appreciate the results. You were just born into it, and no one was there to coach you. No one told you how to. Your parents couldn't even coach you because they didn't even have an idea. But now you're here navigating and charting that path that has not been taken in your generation. And in your book, you usually talk about wealth as a tool, not an identity, which is a difficult one for you because you've always grown up with wealth as an identity for you. But now you're detracting from that perspective and you're seeing it as a tool. Can you break down what that means practically? How would you help clients separate their self worth from their net worth?
Yeah, that's a great question. It all starts with my clients, it all starts with what is it that they want to do and who are they called to help or what are they called to do essentially. I find that, separating your self-worth from your net worth is really a process of doing something for others and using your resources and wealth for something greater than yourself. So many times I find that inheritors don't have any purpose or a sense of fulfillment in their life. And that comes with just being super free and having no schedule and having nothing to do. And so I find that the second you dive into something that feels meaningful to you and you start to get involved in your community or whatever it may be, a foundation or your own business, whatever it might be, I find that your self worth is, you can start to see more of your own self worth and not, associate your self worth with your net worth.
Oh, amazing. I like the way you put it. So, did you ever get any pushback from your peers? Because I know growing up, you would have a couple of your colleagues and your friends that are also trust fund kids. So, did you ever get any pushback like, dude, why are you trying to reinvent the way? Why are you trying to fix what's not broken? Did you ever get any of such pushback from them, or have they been supportive all the way?
All of the inheritors and like my acquaintances that have inherited or are in similar situations
Okay.
have been supportive and have understood it and have seen the need. I have gotten pushback though from people who don't understand it, who haven't inherited. And so it's interesting too. I've also gotten pushback from, I mean, from one circumstance or instance, it was a friend of mine. She inherited, and she was the inheritor from a pretty massive family. And her husband, who married into it, he gave me pushback, and he didn't understand it, which I found was interesting because he wasn't the inheritor, and she found it totally interesting and was totally open to it, but he gave me pushback, and I just found that interesting because it's a whole dynamic too, marrying into it,
Yeah.
and I talk about that in my book. All the money from my family that was inherited came through the woman, so it was my great grandmother, my grandmother, and then my dad. So both my great grandma and my grandmother married men who kind of married into it and came from nothing. And so it's a whole dynamic to marry into it and have all this money that was inherited from your wife. And then, yeah,
Yeah. Yeah, I can understand them because there's this fear of wanting to protect the wealth so it doesn't run out because coming from a background of not having anything to now having so much, there's always this trickling mindset that, oh, this thing can run out. So that's why there might be that guilt or fear. So how would you support your clients who struggle with the guilt of the privilege and also simultaneously fearing to losing it all? How do you help someone to overcome the shame of inherited wealth while building genuine financial confidence? Because I understand that because of the way society tends to backlash at rich people, it might be very tricky, like moving in that space. So, how would you help your clients to basically balance that guilt and the pressure of losing it all?
yeah. Yeah, the guilt can stem from a few different places. So I would start there and kind of see where is it stemming from. Are they overspending? Are they like what is it actually stemming from? So kind of balancing this guilt of privilege and wealth while also balancing the fear of losing it. If the guilt is stemming from overindulgence or overspending, but there's also a fear of losing it all, then I mean, that would be the easiest fix, we just look at
Okay.
the, what's
Spending
coming in,
habits.
what's going out, spending habits, budget, etc. But then it can also get more layered than that if the guilt is stemming from acquaintances or peers or like an environmental thing.
Oh.
That can also happen. I found that kind of more with my dad. He didn't really have the guilt from spending, but it was more the misunderstanding of why is somebody struggling on the street without food while I'm given everything, right? And so I would say the best way at tackling that kind of guilt goes back to your own personal purpose and fulfillment, right? And what are you doing to contribute to society, and why were you given what you're given? Because that
Mm,
truly is my belief, and that's the belief I carry through for my clients before they even feel it is, you were given what you're given for a reason, regardless.
yeah, like that.
So how do you leverage that, and what are you going to do with it? Because at the end of the day, you can sit there and twiddle your thumbs and scroll all day and for your entire life, but it will be super underwhelming and depressing, and it will contribute to that guilt and shame.
Okay. I love the way you put it because you said something profound that we are put on this earth to achieve a certain purpose. So you just need to find a purpose and find out why were you given what you're given. Now you got handed down your inheritance. What are you going to do with it? Are you just going to spend it and live lavish, or are you going to use it to contribute to society, like you put it? When we talk about guilt and shame, it's a function of what has been passed down. A lot of money habits and money toxic beliefs have been passed down. So, from your coaching experience, what are the most toxic money beliefs that get passed down through wealthy families? And how do you help clients identify and rewire these deep seated patterns?
That's a great question. So starting with my own experience with this, I found that the kind of biggest money belief that was passed down for me was that money only comes from one place and one place only, and it's my trust fund. And that really limited me at the beginning of my career. That really limited me to making money elsewhere or welcoming in money elsewhere. And that belief and that thought process really does contribute to the fear of losing it all, or
Mm,
the fear of like there's not, it's going to be gone one day. I have a whole book in my chapter that talks about generational trauma, and kind of what stemmed the whole book and business was me. I did some alternative therapy in South and Central America during the pandemic, and one of the programs I did was all about healing generational trauma and going back 7 generations and kind of clearing the trauma and healing it.
okay.
And so when we're talking about money beliefs and habits that are passed down, the third chapter in my book, Generational Trauma, is really good for that because it talks about how, regardless of what, like, if you saw your grandparents or great grandparents make money decisions or not, it still is impacting you. I discussed that my grandfather got involved in a real estate development project that had a promising ROI, and he ended up losing $30 million.
Wow.
And I never saw that go down. It was before my time, but I could see in the ways in which it affected me and the ways it affected my dad and his siblings for sure, because they did watch it go down, and the level of fear and scarcity that kind of put into them completely froze them up and really made them do nothing with their money because there was more fear than this belief of, you know, creating more or doing something great with it. And there is a medical term. It's called loss aversion, and it's having a greater fear of
Losing.
losing what you have
Yeah.
rather than the belief to make
Make
more or
more.
make it yourself.
And that's crazy because, a lot of people attribute a poverty mindset or a scarcity mindset with poor people. But now you're flipping the coins to say that rich people can also have that. And it's a toxic trait that can be passed on because you're saying that your parents, your father witnessed your granddad lose over $30 million in real estate. And $30 million that time was crazy money. So
in the
crazy money. So imagine him losing that crazy money at that time. Yeah, your dad would never. When it comes to real estate, I would never even put my hands into it. But then again, that's shutting yourself to the opportunities that real estate can potentially create. And let's talk about your book for a second. The name of your book, the Trust Your Trust Fund. How did you come about that name? I can see it in the background.
Yes. It started with a concept of how to trust yourself with a trust fund. And I kind of was thinking about those books that, like the dummy books for like dummy for iPad or whatever, iPad for dummy or whatever
Yes.
those books are. So that's kind of what I was thinking of when I
Okay.
first started to do it. But then we ended up editing it and it came down to Trust Your Trust Fund. And I just wanted to kind of use a play on words. The subtitle is Finding Purpose and Freedom with Inherited Wealth. Kind of two of the things that I find encompass all the things that I work on with my clients. The purpose is a huge part of the day to day and like personal fulfillment. I think they go hand in hand. And then the freedom aspect of it was, you know, from an outsider's perspective, you would think that like being a trust funder or having an inheritance, like you're free and like it's a dream. As you mentioned, like
Dream.
everyone strives to leave an inheritance for their kids and it really is a dream. But you can also feel so tied up and feel so all the things we've just discussed with it. My key is that, or my goal is that, my clients feel completely free from any burden, the burdens and the blessings of the inherited wealth because,
Inheritance.
yeah.
Amazing. I like the way you put it because you've rightly put it that it could be a blessing and it could be a curse. So you need to trust your trust fund, but don't get limited by it because when we talked about the limiting beliefs or the toxic money trait that's been passed down, you mentioned that many of it would be sticking to one source of income, which is your trust fund, and limiting you to the possibility of even making money or doing a business or doing an investment because you might have seen that, oh, this person tried it and he lost a bunch of money, so I'm not going to lose my money in it. But what would you say are the critical life examples you've witnessed in your coaching community of the errors people are making repeatedly, beneficiaries are making repeatedly? What would you say is a story that stands out for you?
I would say that, I mean, it kind of depends on which aspect we're talking about.
Okay.
So the first thing that kind of comes to mind is the actual investments in money itself. I find that the most common mistakes and errors that inheritors make is not getting involved enough with their investments and their, family offices that are managing everything. So that was really like a big waking up moment for myself was getting involved and having an understanding of what I have and where it is and what it's doing, right? It's so easy to not be involved and to let your family's financial advisors and investors and CPAs handle everything for you. You really don't have to think about it. To me, that contributes to this fear of, not knowing and not being involved and not being hands on. So I would say from like a money and like logistical standpoint, that is the number one thing I see is inheritors not having
Being
any
involved.
understanding or being involved at all. I really encourage, I don't do any financial planning or management myself. That's not what I do. I work specifically on the psychological and emotional side of inheritance, but I have a great network of advisors and investors and all that I can refer my clients to. I would say, most inheritors like will just keep, they'll get their trust money or a portion of it or whatever, and they'll just stay at the same bank and they'll stay with their family's advisor and so on. And I find it really inspiring and empowering to do some research and find maybe it's a different banking institution, maybe it's the same,
Yeah,
but making a personal relationship with an advisor and going with them. Like I had transferred
definitely.
banks when I got a big distribution and had a personal relationship with the advisor and really felt more aligned as far as values and understanding with the advisor. So yeah, that's one aspect of it.
That makes a lot of sense. Yeah, getting involved because in as much as these people are going to invest in your best interests anyways, but it's one thing for you to have the meal served, it's another thing to understand the process. So when you get involved, it's even easier for you to make decisions or understand the decisions that are being taken on your behalf as an inheritor. So let's tilt this conversation a bit towards real estate. The focus of our podcast is real estate, business, and investment. So, given our audience's focus on real estate investing, how do you advise trust fund beneficiaries to approach real estate both as a wealth preservation and growth strategy? I know you said you're not hands on like in the investment decisions, but you have a network of advisors. So what would you advise our audience with respect to real estate
Yeah.
investing?
I love this topic and I love real estate. So and I'll start with my personal story and
Amazing.
where that stems from. So I was turning 21 and I was getting my first large trust distribution that
Wow.
was substantial and more money than I needed at 21. And I was
How much was
working.
it? Can you give us a number?
Yeah, it was so I get distributions every couple years until I'm
Oh,
35 and it was $400,000
wow.
and I was 21. I was working at one of my good family friends' businesses in Santa Fe, New Mexico, which isn't too far from where I grew up, working at an art gallery. So I was making a really good living. I was actually making good money and didn't like, I just knew that with this money, I was going to go buy a G Wagon or a Range Rover and a bunch of designer clothes. Like that's just where my mindset was. And just deep down and intuitively, I knew I couldn't handle like $400,000 sitting in my checking account.
Mm,
So, with that being said, I decided to buy a house and I put 95% of what I was getting down as my down payment. I literally put it all into the house.
wow.
And it felt extreme. My trustees and financial advisor, funny enough, advised against it. They were like, this is not a good idea. Don't do it. Don't do it. And it was more logical than like listening to them. And I also weirdly, I don't know how, but I had an understanding of markets and how different markets are working. So they're all based in Illinois and like out in Chicago and out of Chicago, which they carry like big property tax and it's not like increasing in value. The real estate there, like insane. But I was in Santa Fe, New Mexico, and I had this opportunity. I just knew that this market was a good market to invest in. So, anyways, long story short, I did it. I still have my house there today. It's doubled in value and it's doubled in value. I have a renter in there who it's unbelievable the rent I get for it. It's just really a niche market, so yeah. So anyways, with that being said, I love real estate. I think it's one of the best places you can put your money, especially if you're like building a home for yourself or you're going to live there. But with that being said, I always like to talk about and research like the market you're investing into or the market you're looking to invest into because
I think.
sometimes it doesn't make sense, depending on where you are, property tax,
Yeah.
the property value increasing or decreasing or whatever it is. So, I always approach it with caution, but at the same time, encourage inheritors to buy property for sure.
Wow. I love that story because I'm glad it didn't turn out badly. You went with your gut, and you're a very intuitive person. I'm sure you did your research and you'd be like, okay, this is a good investment. I'm gonna go hands-on and you're reaping the benefits today. A lot of people discount real estate because first of all, they don't even understand it. If you don't understand something, then find out about it. That's why we're doing this podcast. You went against the grain of advice that you're getting. Oh, don't do it, don't invest in it. And you invested in it and now it's making tons of money. And there is this fulfillment, like you said. So how would you I know that there's a difference between earning your first million and inheriting your first million. You are a proud example of that. So how does the psychological difference impact investment behavior? And how do you help clients develop an authentic financial confidence when it comes to investing?
That's a great question. I would say that I think a few different things for that. I would say it goes back to getting involved and like really feeling aligned with your financial advisor or investor, whoever it is you're working with. I think it's super important to have a team and have people in your corner that you trust and you have full transparency with. I think tackling any of this alone is super daunting and not the best thing to do. Um, and then having those people in your corner and having those personal relationships. And then I would say independently, like just doing the research and kind of doing your due diligence
Mhm.
on whatever it is that you are interested in doing. And, I would say that goes hand in hand with making personal connections and relationships and learning from somebody who has done it before and really finding those mentors too. I've had some really amazing mentors in my
Yeah.
coaching career. In everything I've done in my adult life, I've had mentors in that space, but with coaching specifically, I've had amazing mentors that have been able to, show me the way, even though it's different, following somebody who's done it before is the most helpful.
Best way. Amazing. Yes, it's easier to follow someone who has walked that path. So you minimize your mistakes and you're also walking the path that no one else has walked. So let's talk about your coaching program. What's the sole purpose of your coaching program? What are you trying to help your community achieve through your trust fund coaching program?
Yeah. So right now I'm just offering a 90-day program, and the goal is to really help my clients find and realize their purpose and fulfillment and what it is that they're meant to do with it. Many times, and it really does range. It's such a customized personal process and thing. Like I have one client who the majority of my clients are 18 to 35. They're coming into money and they are just lost. They don't necessarily know what to do with it. They don't know what they want. And so it really is just getting clear on what they want. I kind of have a joke with my coaching community of like that's like the hardest question you'll ever be asked is what do you want? And so getting really
What do
clear.
you want and your why? Why do you want what you want?
Exactly.
Yes.
Totally. And then why do you want it? So getting clear on that and then just like really getting involved and feeling empowered with what it is you have and just trusting that you were given what you were given for a reason and you can make the world a better place.
I know many inheritors will struggle with that question. What's my purpose? What do I want? What do I want to do? How do I contribute to society? If I don't need to work for money, then what else? I already have the money because a lot of people's drive or purpose in life is tilted towards the money. If it's not making money, it's not making sense, is it?
Right.
So, how do you help your clients discover meaningful ways to use their wealth to align with their values that creates that genuine fulfillment? They're not just doing it to tick the box that, okay, Chase is doing something great. I need to do something great so that I can be compared to Chase. So, how do you help people? How do you help your clients to discover their purpose? Do you help them to discover their purpose? I know we talked about what do you want, why do you want what you want, but walk me through your process.
Yeah. It's really funny and interesting because it's always right there in front of their faces and they don't even realize it, you know? And
Uh,
I think that's kind of the fun part of this job. And what I do is I see people with all different sorts of passions and interests and skill set too. I think that's a big part of it. But typically I'm just, it's the power of questions essentially, and them having just these interests, these natural interests, that it could be anything, whether it's, whether it's like, I have a client right now who's like super into like horses and the ranching thing, or maybe it is something more like philanthropy or something, that like just these natural interests that these people have. Everyone has these natural interests, and so it really is about figuring out how can you do what you love to do and follow this interest and turn it into something that is either going to help somebody else or help yourself, right? And it just kind of depends too. I have some clients who will never have to work a day in their life, and then I have some clients who are going to have to work and figure it out for themselves. So, it kind of does just depend on where they're at and what they're inheriting, and what their interests are. But
that makes sense. And I like the way you put it because you're basically reverse engineering the grain. Typically, the average person is working to money, and in the path of working to money, they find their purpose.
Mhm.
But now, this person, your clients already have the money, they're already there.
Yeah.
And now you're reverse engineering the grain for them to find a purpose for and
Totally.
change money. It's just the flip side of the coin, and it's very interesting to see.
Yes. Yeah.
So I understand that family money discussions often become minefields. You would agree with me because you're the first son. How many siblings do you have?
Or
Oh, wow. So, what framework do you give families to have like healthier, more productive conversations about money, inheritance, and financial responsibility across generations?
Yeah, that's a great question, and something I've been kind of doing more in the last 6 months than I had before. But I would just say open communication and transparency is the number one thing. People do not like to talk about money. They don't like to talk about the generational transfer of wealth. It's a topic that's pretty avoided and always kind of passed off to a third party. And that was kind of my experience too. It was never a conversation with my actual family, but it was more like the bankers or, the investors or whatever. And so that's kind of the first thing I always encourage, is having open conversation and just full transparency with your family, with the generations. I always wish I could go back and talk to my grandma more. Like, I was so young when she had passed away, and I just think a lot of knowledge and from her experience could have been passed down just through conversation. I also think it's so important it just depends on the person who you're talking to, and like their behavior and etc. But I always try to keep it lighthearted. Like, I don't want it to feel super heavy and what's like greedy.
Formal and serious.
Yes, formal, and I say greedy because it's more about opening conversation for better understanding, and versus like greediness and like wanting more essentially. I think that's a lot of people's fear, especially passing down money, is like, just people who pass down money like know that money issues occur, especially when it's being inherited and there's siblings and there's a big family. There's
Yeah,
gonna be tension. So just having full transparency and
open
um
conversations.
yeah, open conversations.
Amazing. And I like the way you've shared your story and walked us through your journey because you started from not knowing what to do with money to now coaching others into what money means, finding their purpose and all. So what would be your top advice? This is us wrapping up now. What would be your top advice to parents watching in the audience about raising their family, raising their children to have healthy relationships with money? What's your top advice for such parents?
Yeah, great question. I would say that, I would say that your actions and what you're doing is like the biggest thing that's going to teach or influence your children. So kind of like what we talked about earlier, generational trauma and the generational thing. Everything you do or don't do, your kids are going to see and feel. And then aside from that, the open conversation, having conversations with them, teaching them, and also letting them do what they want to do, as far as like a career or, whatever it is
Yeah.
that they are drawn to do. Because so many times you see these wealthy families have a lot of pressure and expectation on their children and want them to take over the family business or want them to do something specific, doctor, lawyer, whatever it is.
Yeah.
But, if the kid or the child doesn't want to go that route and they're being forced to do that, that's going to cause a whole slew of, different issues and resistance and all that.
Yeah, and I think it also comes back to the point where we made about the fear of losing it all. I mean, I know parents would want to force their kids to be in the family business so they don't lose it all to a stranger. But then again, there's a place of balance. The kids still want to do whatever they want to do. And no matter how you pressure them, they're still not going to budge. Anyway,
Yes,
so you might as well just build a business that can run it on its own, with or without you, and allow your kids to do whatever they want to. When they get to that point of realization, they're gonna still come back to the family business anyways. So it's a win-win.
absolutely. Yeah.
So before I let you go, so we'll just have a quick fire round session. So this is me hitting you with a bunch of questions and you fire back at me.
Yeah.
So the single most important advice about wealth would be what? What's your single most important advice that keeps you going about wealth and money?
I would say, how rapid is this? No. Um,
No
what
worries.
with wealth in general, I would say
Yeah. Based off on your experience, like what's the single most important advice you would give someone else in your shoes?
in my shoes, I would say don't fully like rely on it or expect it.
Nice. If you could leave your clients with one mindset shift that would transform their relationship with money forever, what would it be?
I would say that it would go back to the my initial belief about money only coming from one place and one place only, and that it would really be kind of an abundance mindset shift to kind of being open to receiving it elsewhere.
Nice. So, are you a morning or night person?
I'm a night person.
Like it's I'm also a night person, so yeah, I think we're in
Yeah,
sync.
yeah.
Tea or coffee?
Coffee.
So, what's your most coveted productivity tool? What's your best productivity tool?
Um, I would say I would say putting the phone in a different room or having one of those
Oh,
app blockers and just staying off the phone.
a different room is extreme.
Yeah.
So, how do you unwind when you're not too busy? What's the summer plans looking like for you?
I live right here by the beach, some of the best beaches I think in America. So I love to go to the beach
Okay.
and
You like to surf?
I don't surf. No, I don't surf. I
Okay.
have, but I'm not a big surfer. I like to just go put my feet in the sand and chill, get in the sun. I'm also a reality TV junkie, so watch some reality
Mm,
TV.
nice. You look like a techie, like a tech guy.
I'm not techie. I wish I was. I wish I was. I'm not.
So how can we reach you? You can talk about your books, your socials, your websites. How can
Yeah.
we get you to you?
Yeah, you can buy my book anywhere you buy your books, Amazon, Barnes and Noble, or you can go to the book website, trustyourtrustfund.com. My Instagram handle, all my social media handles are Trust Fund Coach. Pretty simple. And my coaching website is thetrustfundcoach.com.
Amazing. So there we have it, guys. Chase Collins has basically downloaded what it means to trust your trust fund and not depend on just one income source. He's basically demystifying what inheritance means and how you can build an abundance mindset around it. He came from legacy building and he's trying to chart a new course for himself. So I'll make sure to drop the links of the book and his socials in the description. So do well to follow Chase and check out his book. This book is one for you. You might say, "Oh, you don't have an inheritance, so you don't need to buy the book." You need to buy the book because you're building wealth. As long as you're on this podcast, you're going to build wealth that you pass on to the next generation. So you need the book. So let's continue to turn knowledge into action and breaks into bank. So I meet you in the next episode. I remain your host, Stephanie, and this is me signing out. Cheers. Thank you, Chase, for being on
Thank
the board
you.
with us.
Thank
It
you.
was